Welcome back to the channel. Today, we're diving into how you can start investing with just $100. Yes, you heard that right, just $100. You might be thinking, Graham, is that even possible? Can you really grow wealth with such a small amount? The answer is a resounding yes. It's not about how much you have, it's about starting and letting the magic of compound interest work its wonders. So whether you've got $100 to spare or you're already a seasoned investor, stick around because I'm about to break down how to make your money work for you. And hey, if nothing else, at least you'll have a great story to tell at parties. I started my investment journey with just $100. Let's talk about why starting early is key, even with just $100. You might think that a small amount like this won't make a difference, but that's where you're wrong. The magic lies in the power of time and compound interest. Imagine this, you invest that $100 and it earns a 10% return year after year. At first, the growth might seem slow, but don't be discouraged. The real magic happens over time. Sounds too good to be true. It's not. This is a well-documented financial principle that has helped countless people grow their wealth. The key is patience and consistency. That's the power of compound interest. When you reinvest your earnings, your money starts to grow exponentially. It's not just about the initial investment anymore. It's about the growth of your growth. Now, instead of just earning money on your initial investment, you are earning interest on your interest. This is where the concept of money making money comes into play. Over time, this can lead to substantial growth. It's like a snowball effect. That $100 starts small, but over time, it gains momentum and grows exponentially. The longer you let it roll, the bigger it gets. The earlier you start, the more time your money has to compound, and the bigger that snowball gets. This is why financial experts always stress the importance of starting early. Even small amounts can grow significantly if given enough time. Trust me, your future self will thank you. By starting early, you're giving yourself a financial head start that can lead to greater financial security and freedom down the line. So don't wait. Start today and let time work its magic on your investments. Here's a funny anecdote. Imagine if you had started investing that $100 back when you were a kid. You'd probably have more money now than you ever made from all those lemonade stands combined. Starting early really does pay off. Now you might be thinking, Graham, $100 isn't enough to buy a share of Amazon or Tesla, and you'd be right. These companies have share prices that can run into the thousands, making it difficult for the average investor to get a piece of the action. But don't worry, there's a solution that makes investing in these high-priced stocks accessible to everyone. But that's where fractional shares come in. Fractional shares allow you to buy a portion of a stock, rather than having to purchase a whole share. This means you can invest in your favorite companies without needing a large sum of money up front. It's a game changer for small investors and those just starting out in the stock market. Think of fractional shares as owning a slice of a stock. Just like you don't need to buy an entire pie to enjoy a piece, you don't need to buy an entire share to invest in a company. This concept makes it easier for everyone to diversify their portfolio and spread their investments across multiple companies. Instead of needing thousands of dollars to buy one whole share of a company like Apple, you can buy a fraction of a share with just a few bucks. This means that even with a small amount of money, you can start building your investment portfolio and take advantage of the growth potential of big companies. This opens up a world of possibilities, allowing you to invest in companies you believe in, even if their share prices seem out of reach. You can now own a piece of your favorite tech giant, retail brand, or any other company that catches your interest. This democratizes investing, making it more inclusive and accessible to everyone. It's like getting a taste of the stock market pie without breaking the bank. Fractional shares empower you to start investing with whatever amount you have, no matter how small. This way, you can gradually increase your investments as you become more comfortable and knowledgeable about the stock market. So, don't let high share prices deter you from investing. With fractional shares, you can start your investment journey today and work towards your financial goals one slice at a time. Imagine you're at a pizza party and there's a giant pizza that costs a fortune. You don't need to buy the whole pizza to enjoy a slice. Fractional shares are like getting that delicious slice without having to empty your wallet for the entire pie. So, grab your slice of the stock market and enjoy the party. Chapter 3. ETFs, your diversification secret weapon. Diversification is crucial, and that's where ETFs, or exchange-traded funds, come in. Imagine you're building a safety net for your investments. Instead of relying on a single thread, you weave together multiple threads to create a strong, resilient net. That's what ETFs do for your portfolio. ETFs are like baskets of stocks. Just as a basket of fruits contains a variety of fruits, an ETF contains a variety of stocks. This variety is key to reducing risk. Instead of putting all your eggs in one basket by investing in a single company, you spread your investment across multiple companies. This way, if one company doesn't perform well, it doesn't drastically affect your overall investment. ETFs allow you to invest in hundreds or even thousands of companies across different sectors and industries. Whether it's technology, healthcare, finance, or consumer goods, you're not limited to one area. This broad exposure helps cushion against sector-specific downturns. This spreads your risk and protects you from the volatility of individual stocks. When one sector is down, another might be up, balancing your overall returns. It's like having a well-balanced diet. You get the benefits of different nutrients, ensuring overall health. Think of it like this. You're investing in the entire stock market, not just one company. This holistic approach means you're betting on the economy's overall growth rather than the success of a single entity. And the best part, many ETFs have low expense ratios, meaning you keep more of your hard-earned money. Lower fees can significantly boost your returns over time, making ETFs a cost-effective way to diversify. Additionally, ETFs are highly liquid, meaning you can buy and sell them easily on the stock exchange, just like individual stocks. This flexibility allows you to react quickly to market changes and adjust your portfolio as needed. With the rise of technology, managing your ETF investments has never been easier. Many platforms offer user-friendly interfaces and tools to help you track and optimize your portfolio. You can even set up automatic investments to ensure you're consistently building your diversified portfolio. In summary, ETFs are a powerful tool for diversification. They offer broad market exposure, reduce risk, have low fees, and provide flexibility. By incorporating ETFs into your investment strategy, you're setting yourself up for long-term success and financial stability. So, whether you're a seasoned investor or just starting, consider making ETFs a cornerstone of your portfolio. They truly are your diversification secret weapon. And remember, in the world of investing, a well-diversified portfolio is like having a secret weapon up your sleeve, ready to tackle any market challenge. Chapter 4. Robo-advisors investing on autopilot, feeling overwhelmed. Don't worry, robo-advisors are here to help. Robo-advisors are like your personal investment assistants. They use algorithms to build and manage your investment portfolio based on your risk tolerance, financial goals, and time horizon. All you have to do is answer a few questions, set up an account, and let the robo-advisor do the rest. It's like putting your investments on cruise control. It's like having a financial advisor in your pocket, but without the hefty fees. Plus, many robo-advisors have low minimum investment requirements, making them perfect for beginners. So, sit back, relax, and let the robots do the heavy lifting. Chapter 5. Never stop learning, your path to financial freedom. Investing is a journey, not a destination. The more you learn, the better equipped you'll be to make informed decisions and grow your wealth. Make it a habit to read books, listen to podcasts, and follow reputable financial news sources. Remember, knowledge is power, and in the world of investing, it can also mean financial freedom. Don't be afraid to experiment, make mistakes, and learn from your experiences. The most important thing is to start, stay consistent, and never stop learning. And remember, the path to financial freedom might be paved with spreadsheets and stock charts, but hey, at least you won't have to worry about losing your way in a forest. Thanks for watching. If you found this video helpful, make sure to hit the like button and subscribe for more tips on investing and personal finance. Remember, you don't need to be a millionaire to start investing. With just $100 and the right knowledge, you can begin your journey to financial freedom today. And remember, the best time to plant a tree was 20 years ago. The second best time today. See you in the next video.